Last week we had a US bank basically going into administration, going bust. Is this 2008 all again? Keep watching. Hello, I'm David and this is Trading Today. Last week we heard that SVB, that Silicon Valley Bank, went bust. Over the weekend there were big moves from the US Treasury, US Federal Reserve and also the Federal Deposit Insurance Corporation, and they have ensured that all clients, customers of SVB are going to be safe. They're not going to lose any money. In the UK, SVB also had a branch over here, or it had undertakings over here, I should say. It's not a branch type bank. And indeed, in a very neat and very quick move, we've heard that HSBC have come in, swooped in, and they have bought it up. And indeed, all UK customers can breathe a sigh of relief. Their banking will go on as usual. So the big question is now, is this a one-off? Is it isolated? Or is there going to be further contagion in the banking sector? Well, as far as investors are concerned, there are worries. Certainly, we're seeing a knock-on effect in banking stocks. We're seeing even this morning, after big sell-offs last week, the likes of Wells Fargo down 2%, JP Morgan and Citigroup both down over 1% apiece. But it's the regional banks in the US which are like SVB, really getting hit badly. Down 65% this morning is First Republic, and you can expect, I think, sort of further selling and further big markdowns for these smaller regional banks, which of course investors are worrying have been doing the same kind of thing, which is sort of borrowing long and lending short, and now these banks getting into trouble when you see the big hike in interest rates that we have seen since March. Okay, so that's that. At the end of last week, we also had non-farm payrolls, came in much hotter than expected. That would you usually expect the market to sell off on news. The market rallied on the news. It sold off later in the afternoon. But what it was looking at, I think, and what people are saying, is that average hourly earnings were lower than expected and the unemployment rate was higher than expected. So perhaps there's we're going to see a bit of a change around when it comes to the employment picture in the US, and that may take the pressure out of inflation. Now, on the subject of inflation, tomorrow we've got US CPI. Now, it came in at plus 6.4% last month. It was expected to come in at plus 6.2%, but nevertheless, although it's higher than expected, it was a decline month on month. This time round, expected to come in at plus 6%. This is headline year on year. That's a big ask, so there's certainly scope for disappointment, so do look out for that. And also please bear in mind that the clock sprang forward in the US and Canada over the weekend. They haven't done so here. So US markets will be opening an hour early and closing an hour early as well. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow. And as always, best of luck with your trading. Thank you. Goodbye.